Back with the quickest of the quickness because, as one may expect, things in the market have changed, and there's one change that's recently occurred that directly relates to a stock that we've talked about in the past. You're watching Sekidur, and this episode is on the Meritz Group, and today we'll be talking about adjusting to unexpected change. Now, before I continue, I'd like to remind everyone that this channel exists for educational purposes only and isn't meant to be a replacement for legal or financial advice from a paid professional. Before you get into any position, it would benefit you to interrogate why you're entering and whether the company's merits are suitable to your personal financial plan. How can you know? Well, outside of liking this video and subscribing to the channel, the only thing left to do is get yourself educated and do your own research. In any case, let's do this thing. Alright, so if you were watching the markets on Monday, you may have noticed a steep drop in the prices of three specific stocks. Meritz Financial Group down 15.56%, Meritz Securities down 13.83%, and most interestingly to us, because we've talked about it in the past, Meritz Fire and Marine Insurance down 16.78%. The reason for these drops are simple. But actually, before we get into it, let's very quickly review a little bit of what we said about them a few months ago. Specifically, in our video on defensive alternative investments, we mentioned the potential benefits of Meри츠화재 as a low beta stock with historically high dividend payouts and growth to their dividend yields over the past 5 years, as well as a steady payout ratio between 30 and 40% across that time. Now, at that time, it seemed like a solid place to invest for those who are simply interested in seeing returns in the form of dividend payments. Well, in spite of the fact that their progressive payout policy has been a major draw for investment over the past few years, Meritz Financial Group declared on Monday that they would be lowering their dividend policy down to a payout of closer to 10%. As a result of this declaration, KB lowered their target price of all three of those assets, and investors were naturally P'd the FO, as would be expected. For this reason, it will be no surprise if we see lots of downward momentum of the stock as dividend-focused funds, dividend-focused investors, and retail and institutional investors alike all jump ship. On the side of Meritz, well, one rationale they've given is that they intend to increase shareholder value through buyback of stocks. As we've covered before, stock buybacks decrease the number of shares outstanding and increase the earnings per share for existing stockholders. Generally, companies do not have to choose between one or the other, so Meritz's decision to do so is a bit puzzling since they must have known that they would have received significant backlash from the investing public, particularly with them having increased their payout as recently as last year. In the short term, it wouldn't be surprising to see the stock price drop even further, but that begs the question: should someone holding the stock start selling right now? And as usual, that depends. Were you in the stock for the dividend? If you were, then it's kind of looking bleak at the moment. Cutting their dividend policy after a good year isn't a great sign, re how much they actually care about small investors. Still, not all hope may be lost. If the company buys back a significant number of shares and continues increasing their profitability, then shareholder yields may not be affected so drastically as we may be anticipating. Of course, doubling and tripling profits to do so is not an easy feat, but like I said, it's not looking that great. Now, if you were in it for reasons outside of the dividend, such as belief in their business model or in their growth prospects, then this might not really affect you very much. And it might actually provide you with a lot more buying opportunity as people try to leave as fast as they can. If that's you, congratulations, volatility. Here are your buying opportunities. Real talk though, this is a really good example of two things: the importance of watching the market and knowing what's going on with your stocks that you're holding, and the importance of understanding the abruptness with which a company can change its policies. In any case, if you are watching the markets and wondering why these low beta stocks took a nosedive out of thin air, now you know. It's one of those times when you're going to have to either trust or adjust your thesis, and once you've done that, act accordingly. Is it a time to buy low, or is it a time to jump ship as fast as possible? Only time will tell. So all we can do now is watch how the company and its shareholders handle the fallout and, again, adjust ourselves as we see fit. Alright, short one after that marathon thing we dropped earlier. Hope y'all are doing alright and we'll catch you later. Peace, fam.